Okay, so we're back to this random portfolio that completely beats the SP 500. And just like any portfolio I build, I mean, it doesn't matter what you pick, all right? You can change these all around. I mean, you can throw in some leveraged portfolios that people will tell you you're crazy if you pick something like this, right? They say, "Oh, yeah, that's too dangerous," and it's not, right? We'll get rid of Meta. Maybe we'll put in SOXL semiconductors. We're gonna leverage them 3x. We'll put that in there. You know, I mean, and all of these companies, I don't even know what they are. I know Visa and Mastercard, but like Honeywell, I don't even know what that is. We're going to change that to like, you know, change that to let's go with Hims stock, right? We go with Hims. Okay, and then we're gonna go with we go with we drink Coca-Cola. We keep Coca-Cola. We don't like these guys. We're gonna go with Hood. All right, we invest with Robinhood. So we're gonna pick Robinhood Markets, and then we're gonna go with a random SPXL tech. We're gonna 3x it. We're gonna try to 3x that one, and I don't even know what this is. So we're gonna just pick Texas Roadhouse because they got the best steaks out there. This is funny. It's like the best steakhouse in the world, but it's like the cheapest. It's great. So here we are with. We got to add in some AMD, right? We got to do some AMD in there because that's advanced money destroyer. So we got to get a money destroyer in there. We'll have this, in aerospace. We're gonna put in Life MD. Right, this is another up and coming. Actually, we're gonna go with Celsius Energy Drink. Right, we're gonna go with Celsius Energy Drink. Because we drink Celsius. We get our weight loss drugs from Hims and Hers, but we also like our Coke Zero. We invest with Robinhood Markets. We eat Texas Roadhouse. We're gonna leverage the S&P 500 3x. We think we think that semiconductors are the new oil, so we're gonna leverage that. We use Mastercard instead of Visa, so we're gonna keep that. We're gonna we're gonna take AMD because it's supposed to be it's the worst company in the tech sector, so we're gonna take that one, and we're gonna leverage tech as well, and we're gonna just do $200 a month, all right? And this is for 3 years, right? So this is a 3 years. Because Robinhood isn't a very it's a newer company, so you got 3 years in the making here. So if you did 3-year return, look at this, all right? Just random stuff. 1,700 versus 1,100, or 17,000 versus 11,000. I mean, like I say, you just straight up beat the market. I mean, and this is a short term because of Robinhood. Well, let's get rid of Robinhood, right? Robinhood is too new of a company, so we're gonna replace Robinhood with Apple. All right, we're gonna replace Robinhood with Apple. Okay, let's see what we get. All right, look at, oh my goodness. So now see, here's the problem, right? And now you're looking at 5 years. So this is just 5 years of investing, right? 5 years of investing, 36,000 versus 20,000. I mean, that's how wild it is. Well, let's say we want to get rid of some of these, right? We're going to, maybe we don't want 10 we want to be a little bit more risky. So we're going to go Texas Roadhouse 20%. Go with Apple 20%. We're going to go Coca-Cola 20%. We're going to go Tech 20%. And we're going to go Celsius 20%. And then just random out of these companies, see what happens, right? So look at this. Now we're looking at 10 years. 10 years. And oh my goodness, look at this. $191,000 compared to a typical, of course, it's $49,000. Right? like you just can't make this up, right? Like, I mean, these guys will tell you it's impossible to beat Vanguard, and they'll tell you don't invest in these companies. Now look at this. 191,000. You can look at how these companies came and gave you money. Look at Teckle, 53,000. Celsius returned 47. Coca-Cola 12. Look at Apple, Texas Roadhouse, $29,000. It beat Apple. You would have thought that Texas Roadhouse is going to beat Apple. Like even Celsius. But beating Apple, I mean, Apple's the second to worst performer in this. You have Coca-Cola and Apple. I mean, this is eye-opening, and people would tell you, oh, it's Celsius is going down, or Teckle's going down. We're gonna bear run, get rid of it, but you don't, because you just maintain these equal weights. That's all you do, and you rebalance it. It doesn't matter what the stock does, right? It doesn't matter what the market's doing, what people are saying. Pick your companies, balance them out. Preferably go with 4 to 10. If you want to go with 5 with 20%, that's okay. But 10 is typically, that's where that's where you're really controlling the volatility. This here is doubling it, so you can really maximize your gains if you have a lot of trust in a company. Well, I mean, it speaks for itself, right? I mean, 5 years, 191,000 to 50,000.